It don't matter. It doesn't matter. Nah, I'm gonna use no trading bot. All right, man. All right, let's get the week started. Let's get the week started. I mean, the move already happened already. That shit already happened already. That is ratchet. I can tell by the way she ran. I would have stopped out of that. That's crazy. That's crazy. Why would I stopped out of that? It was free. It was free. Mm. Tell by the way she ran. Open that size. Oh. No, it just be kind of foolish to get this far. Just be kind of foolish to get this far. Mm-hmm. 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 I'm selling this trade. Oh yeah, I never closed out of it. Oh. Rest in peace, whoever tried to buy the double bottom at 620. I mean, if they didn't stay in this damn thing, I doubt it though. I doubt it. I doubt it. All right. We're going to see if this short works out. I'm in the sim in this trade, so this trade is not going to hurt me or benefit me in any kind of way. Just going to see if what I believe is going to play out will play out. If given the opportunity tonight, if we do see a move down, I do want to get in around this area right here. You can see that the bulls and the bears love this level right here. They've been finding support. They've been trying to turn it into resistance. You can see them actually being successful in turning this area into a resistance right here. And then you can see that they broke above it. And so we might get a pullback right here somewhere. So I'm going to be looking for that or a potential long. That's if we don't continue to just grind our way up, because that is a strong move. We talked about this range last week. That's why I put a red square around it to let me know that if we were to touch this range, if we were to get price to trade and hold underneath it, then that would signal that we're going lower. You can see that uh, as we gapped open, as we had a gap open and we gapped down underneath this range, you can see how quickly price was bought up. You see how quickly this price was bought up, the gap was filled, and we got this strong move to the upside. So this is definitely an area that you need to mark out on your charts, a range between 525 and about like 510, because they was not playing. The bulls put this thing right back up. If we do see price continues to uh, trade underneath this range, we're going lower. Don't know how much lower, but we're definitely going lower. Underneath that range is dangerous. You can see that they actually bounced it in this range right here. They tapped in this range and they bought it right back up. So 406 underneath 406, huh? Underneath 406. Literally underneath this little level right here. Hmm. Uh, I do not expect for the bull or the bears to hold this at all. I do think we'll get a move down, but this won't be anything rotational. I don't believe. So this week it appears that the CFTC data was updated and is caught up. So I'm going to share that with you guys right now. Right now, the market is suggesting, or at least the CFTC data is suggesting that that move that we saw last week was just that, a move down and not a real reversal. Because what this data suggests is that we should expect more bullishness going into next week's price action. You can see that the institutions are 58% long and they're 42% short, which means that we'll have short moments, but overall the trend is still going to be bullish. There are 19,000 net long and long contracts, and if we look over here at the commercials, they're 55% short and only 45% long. And that means that we should see some bullishness or some more bullishness this week. We'll see. We'll see what happens. What that means is that we may see a move down, but it's going to probably stay in a bullish structure. We're going to probably still be making lower highs and lower low and higher highs and higher lows, and the trend will likely continue. The CFTC data has not been wrong yet. It shouldn't be wrong. This is what the institutions got to report their positions to the CFTC. So this data should never be wrong. It's been right for a very long time, and that's why we utilize it. I'm just glad that they caught up to it, because in January, for whatever reason, since Jimmy Carter's funeral, they were behind on this, and we had the market closing here and there, which disrupted the CFTC data being updated, and finally they caught up. So I was able to update this Google sheet, and so now we know what to expect for next week, or at least so. Now, right now, we're going short. I mean, the reason why I decided to go short here, even though we've had this massive move up long, was because this right here, we had this move down. I expect there to still be short orders. It looks like it did. This looks like if not a reversal, but like a rejection pattern to me. So I just got my stop above this high if I'm wrong, but I do think that we can potentially see a move down. I'll probably set a limit right here at 608, somewhere around this area. Probably set a limit. Probably set a limit there. So, probably set a limit there. Yeah, I'm not even prepared. I don't got to take a book map open or nothing. I've been getting to the point to where I don't even use indicators anymore. I've been relying solely on price action for a while. Usually I keep indicators on for you guys, but I've been finding myself ignoring them. I haven't been pulling up the book map chat at all. Let me this. Looking at price action. 750. Oh, for those that don't know, so right now, TradingView is doing their the Leap competition. You can sign up for it. Apparently, there's people that's up 3 million right now. I was able to get into a position, and I'm up about $26,000 right now. Let me get this. So I'm up about like $26,000 on this. And I'm gonna have to do a lot of trading to catch up to the 3 million that some people are up. Trading panel. I did keep my promise on Friday. I did close out all my accounts, but I knew the market was going to keep on going down. I just had this feeling that it would. All right, so yeah, so I'm up. Oh, so I'm actually up like 27,000 really. Took 2 trades on Friday. I caught this massive drop from top to bottom, let it run over the weekend. It literally filled me and it bounced. Let's look at that. You can only trade the continuous NQ contract though. You can't trade the March contract. I mean, it doesn't matter. It's the same thing. But I had a nice setup on Friday that I just couldn't pass up. And I just had a feeling that we was going to get a gap down. So I was able to get in. So actually, let me just look at it. The trade history. So I was able to get in at 567 short. And the crazy thing is that as soon as this thing set up, I locked myself out of my accounts. Like I literally just walked away from the screen, and I just traded this thing. And not gonna lie, it sucks because when you tell yourself, when you're trying to hold yourself accountable and stuff like that, it's the toughest thing to do. It's the toughest thing to do. This is where actually no, I got in like right here. I got in at 695 last week. I was able to catch this drop and ride it all the way down here. And obviously you can see my little taking my profits here. So I was very proud of that trade, but I wish I had it in a like in an eval or maybe my funded accounts. I made money in all my accounts except one of my funded accounts, and I was literally fighting demons because I was like, dude, you can just make money in that account. But I would have been upset if I lost money when I told myself that I'm just not going to push my luck. I'm going to just come back on Sunday and look for a new setup. About 605, 660, 660, 608. Yeah, that's probably gonna go. Okay. So I'm definitely going to be trading more in this account. I want to be the number. I want to be up there. I'm gonna make $1 million. I got $2,500 of margin. Instead of trading 10 contracts, I should have traded 100 on that short. Missed opportunity, obviously. Hey, what's up, Bandit Blitz? So this is not a what do you call it? I don't think it's a reversal. I mean, obviously overall the market is bullish. I'm just shorting the pullback. What do I see here? So I see that the bears sold the retest here. And I'm just looking for them to follow through. That's what I'm betting on here. Again, I am in the sim on this account, so during the night, I'm not necessarily taking any trades in my eval. I'm taking all trades in the sim. But I'm looking at the bears selling the retest, and I'm just trading the follow through here. That's it. Not looking for a reverse or anything. Mm. It was all right, Bandit Blitz. Bandit Blitz. How was yours? Yeah. Yeah. Yeah, that's always it's always a blessing to see another day. It definitely is. It definitely is. Shit, being able to trade in these markets, that's a blessing in itself too. I mean, I know that we buy evals and we kind of play these games in the market, but not a lot of people have this opportunity to do that. The disposable income to purchase these evals. I mean, to me, $100, $200 eval ain't nothing, but to a lot of people, that's a lot of money. And I was actually thinking about that too this weekend as well. Yeah, I appreciate that. I appreciate that. I try to be as authentic as possible. I mean, I can't be anybody but myself. Um, I try to not only come on this stream to make money, but shoot, just be able to talk about anything. Just be able to talk about anything. Make it a point to try to be knowledgeable in a lot of areas. So, especially when it comes to trading these markets and what influences these markets. That's usually what I spend my weekends doing, just research. This weekend, I was listening to this book, and it's interesting how the algorithm will put stuff in your feed when you kind of need it to be. This weekend, I was listening to this book called, let me actually see if I can find it. So, what this book has is like a bunch of, uh, what is it called? Corporate terms, I think. It's like called. Yeah, yeah, yeah. So I've been listening to this series by Thomas Harold. This guy right here. I've already listened to the first one, or that's not the first one. I've listened to economic terms financial education where he's basically giving you definitions of words. And when I was looking at this book and I was like, why did this pop up into my feed? Something from a long time ago popped into my head. Words shape your reality. If you don't know a word exists, then you won't be able to have that word in your reality. I learned a lot of terms that I thought I knew, but now I know what they actually mean. The biggest thing that stuck out was I didn't know that there was a difference between common shares and preferred shares. The crazy thing is, I started watching Suits with my mother's daughter, and the term common and preferred shares came up in that show, like the first or second episode. And I was like, wow, look at the universe. Look at that. The situation was that this guy he didn't, I guess he had $2 million of common shares, but his wife had, forgot how much it was worth, but she had preferred shares. And if I didn't know what those terms meant, it just would have went past because those words weren't part of my reality. But now that they are, when I hear those words, they're going to stick out. The situation was that I guess he didn't want to give his wife the $2 million of common shares. And I thought to myself, well, why the hell did he give her the preferred shares? The preferred shares is just that. They're more valuable than common shares. They give you voting rights. You get paid out first. You have way more power with preferred shares than common shares. If the company goes under, the common shareholders have to wait in line. The preferred shareholders are going to get their money first. So I was like, why the hell did you give her that in the first place? It didn't make no sense, but it could have been something with the writing. Who the hell knows? But it made no sense. But it was one of those things where it was like, yeah, okay. So the next one I'm going to listen to is the Wall Street terms. But so far, I've listened to the corporate finance terms. I've been learning a lot in this one. And the economic terms. Now, I mean, I've shared many books about the Fed and stuff like that, but as I listen to these books, it just seems like these government agencies are literally just taking from these books, using these books as references, and just doing everything textbook, like literally textbook. It's like, wow, our government was literally doing all of these things. They were talking about tariffs, and Trump is literally doing all these things about the tariffs that this guy is talking about. And this book came out in 2019. So it's like everything Trump is doing and the reason why he's doing it. I was like, damn, it's really out of this book. And but that's just an example. I mean, there's plenty of economic terms, their use cases in their meetings. I would suggest if you're not familiar with economic terms or investment terms or financial terms, giving these book a listen will probably be your best bet. I read one more, and this is the first one, the 99 financial terms every beginning of entrepreneur and business should know. Book one. So my daughter's mother, my daughter's mother. So Bandit Blitz. So right now, yes and no. Yes and no. I appreciate those that join, but do I market myself? No, not yet. The biggest reason why is because I feel that your first impression is always your best impression. There's still some things that I need to fix. There's still some things that I have to work on. And if I'm going to be how do I want to say this? because I don't really consider myself a financial channel. I really don't. I feel like what I'm doing is being an entrepreneur. I love trading, and this would be something that I would always do, but this is not all I do. I mean, in my free time, like I said, I'm learning, growing, trying to build, and I'm almost there. Like I said, I'm not too far from where I feel like I need to be, but there's just some things that I just have to that I have to work on, like because I still go on tilt sometimes, and I really I don't like that. I don't like that, but I have given myself a deadline. March 1st, around March 1st is when I'll start to really, okay, start growing the audience, start promoting myself, start getting into the mindset of really showcasing how to really navigate these markets, because my analysis in terms of what I see the market do, uh, my hit rate is 80, 90%. But that 10% where I make a mistake, or that 10% where I become impatient or I misread the market, I throw my tantrum and I trade on tilt. And I have to focus on that first, because I really don't want to be, I really don't like that. I mean, in the moment, I don't care. But then when I sit and think about it, it's like, oh, yeah, you just do another tantrum, dude. You blew an account, you stopped caring, you did this and you did that. And I, like I said, I have to work on that. But I give myself a deadline, March 1st. March 1st. And then I really start doing what I need to do in terms of growing the audience. But right now, I'm just cool with whoever joins. I appreciate whoever joins. Anybody that engages in the chat. I'm not gonna be begging for likes, because honestly, um, at least on my side, I appreciate the likes, and I guess the YouTube algorithm wants engagement. But at the same time, uh, the money that you can make on YouTube is not going to be through ad revenue, how many subscribers you have. That's not where the business is. That's where the slavery is, and that's why a lot of the big YouTubers are, they like their posting is slowed down. They're not as engaged anymore, because it's like you need to like a million views and this and that just to get like $1,000 or whatever the heck it is, or how much they want to pay per 1 million views, and it just becomes a spinning wheel, in my opinion. So that's not what I'm focused on. What I'm focused on is bringing value. That's what I'm focused on. When I put on a trade, I want those that's in the audience. If I don't want you to follow my trades, that's not what I want. But I want to be able to say, when I put on a trade, it's like, okay, yeah, this guy knows what he's talking about. This guy's analysis is on point. I'm the type of person that I want my work to be valued. And if I'm throwing a tantrum and going tilt, well, then people won't trust my work. That's like a personal ego hit for me, and I don't like that. So um, there's still a lot of cleaning up to do. I'm at the 80, 90% hit rate, but I can do better. Kobe, Black Mama Ben Tyler, I can do better. I got to be more patient with the setups, because sometimes, because I'm so used to the repeating structure that happens, I'll get in before the structure even forms itself. And I know what I'm doing, so I'll do it. But those in the audience was like, dude, what are you doing? And then over time, they'll say like, oh, okay, that's a great entry. It's because I've seen this price action so often that I'll get in before it forms. But at the same time, people that are new, they're not going to know that. And so I just have to kind of I still, like I said, I still got work to do. I got to be able to explain what I'm doing, why I'm doing it, how they can notice the same price action in the future. Just being a better communicator, having more emotional intelligence, accepting when I'm wrong and don't trade on tilt. Making sure that my risk matches the reward. Like I shouldn't be risking 50 points to make 20. I mean, I shouldn't be doing it. I don't do it. I have an 18-point stop. The most I'll probably use is 27 or above a high or a low, just in case, and then adjust it as the price action progresses. But yeah, so. And then I want to be able to help people get payouts, and I can't do that. Well, I can do it, but if kind of like that time where like when I lost the 23K, when I had all that perfect entries, perfect exits, had I followed my plan, and it just took one day, and all that work was gone. Stuff like that, I got to work on. I don't like that. I don't like it. But what I will say is that on Friday, what I'm really proud of, and this is kind of what got me in this mindset that I have until March, because obviously I'm ready, but I'm not moving out of my comfort zone. I'm not putting myself out there because I guess I feel like, oh, there's still more work. There's still more work. No, there's really not. In reality, there's really not. There's really not any more work. But I'm gonna give myself the benefit of the doubt, and I'm giving myself March 1st. So, but kind of like what we talked about on Friday, everything that we talked about, like in the Thursday night stream, and Thursday night stream, and then Friday morning stream, every single thing that I said was going to happen happened. Every single thing. We walked through everything, and we talked about this range and coming back to the market and seeing that the market gaps down below this range and then pops right back up just shows me that I know exactly what I'm talking about. My analysis is on point in that I should stop trying to second guess my analysis. That was a big thing for me in the beginning, not because I feel like my analysis is wrong, but in my mind, I'm asking myself, first off, if it's this easy, why isn't anybody else doing it? There's plenty of people doing it. Plenty of people. Another thing I would say to myself is the people on Wall Street. I mean, I'm just a guy in a hoodie. I mean, my job or in my career, analysis is a big part of what I do on a day-to-day basis. So it's basically me transferring my skills that I do for my career onto the markets. It's the same thing. But at the same time, in the beginning, it was like, well, I mean, it's not like I'm from Wall Street. I'm not a big financial person, or I haven't dedicated my life to it. It's not my area of expertise. What do I know? And I fell for that trap for a very long time. Uh, I would hate seeing areas that I would mark out on my chart and I wouldn't take the trade because I guess I was overthinking it just for it to not only work, but to exceed my expectations. That was definitely a big thing for me to overcome for a very long time. Uh, and once I overcame that, another thing that I had to start working on was being patient because all of a sudden, oh, I'm not patient anymore. It's like, where the heck did that freaking come from? Like, I don't even want to wait for the setup anymore. I just want to get into the trade. And like I said, that doesn't help nobody but me. I've seen the price action, so I'm going to get in before it forms. But at the same time, newer traders, they're not going to be like, what is he doing? I mean, I understood how scared, or I don't want to use that word. I understand how cautious that I would be when I would get into a position. So I should have enough empathy to know that that's exactly how everybody else feels, especially people that are not confident in their skills. So just being able to be patient and showcase that patience instead of, I don't want to call what I do degeneracy because it's not, but um, just kind of jumping in without no confirmation. That's something else that I want to change too. And FOMO, that's the main reason why I will jump in, because it's like, okay, I don't think it's going to go past this point. So I'll jump in. And I think another thing on Friday as well, where was it at? Or was it Friday or was it Thursday? Yeah, was it on Thursday? I think it was Thursday. Yeah, it was Thursday. Because we was looking for 845 for as an area where they would reject price, because it was a level where they rejected price previously, and we planned for it. And I was like, yeah, if it gets to 845, I'm going to go short. I said that multiple times, just for it to hit where exactly where I wanted it to hit and not even get into the trade, because I was overthinking, second guessing, and stuff like that, just for not only for it to work, but the super work. That right there could have been somebody's day. And I let overthinking get in the way of that. And I don't know why. But it's just the perfectionism. If I'm going to be completely honest, I'm a perfectionist by nature. But unfortunately, when you're a perfectionist, you never get nothing done in terms of moving forward. You'll stay stagnant because you want everything to be perfect. And I allowed myself to be subjected to that. That's why I have that March 1st deadline. March 1st, balls to wall. We're going to make mistakes and we're going to fix them. As long as I adhere to my risk management in terms of I know how much I lose, stick to my 2 loss rule, and then come back the next day, I should be fine. And that's actually something I was doing this weekend too as well. I'm actually share that with you guys. I'm gonna share that with you guys. So this weekend I was actually thinking of just tracking like the market's movement and stuff like that. This document right here, I'm still working on it though. But this is the market. So what I'm gonna do, because I started January 13th, um, I'm gonna start tracking the market January from January 13th, because I think I took 2 weeks off or something like that. But uh, this has been the market, and I'm tracking this, and I think something like this will add value to the audience, will add value to new traders, experienced traders, because uh, these patterns, we can see that usually if the market opens up green, then we should expect red. If the market opens up red, we should expect green. And this is the pattern that the market has been following for the longest, even though we've had more bullish days than bearish days. We've had bullish range, bullish trend, bearish trend. We've only had probably like 1, 2, 3, 4, 5, 6, 7 bearish days out of the year so far. So that should tell you something, that if you think this market is going down, I mean, the market has been low key trending down, but as it's been low key trending down, it's been bullish majority of the year. It's been only bearish 7 days out of this whole year. I mean, we've had some bearish moves, but the bulls definitely has come back up and recovered each time. Each time. I mean, we've had some bear moves down, but you can see that the bears are not taking out these old lows. So it's bullish. It's bullish. We'll see what happens though with this, because we did get a trend line break. And we did get a trend line break. And we got that trend line, we got that retest, and we got that drop. So, and we'll see. I think this range holds though. This range most likely holds 521, 525. So my goal is before that March 1st deadline that I've given myself, I'm just going to start creating documents that not only tracks the NA meetings, and I'm thinking about actually making the NA meetings like a members only thing and having it track the performance. So far as I was going over the results, it's crazy that, well, I'm not going to say that, but the results of my NA meetings are like damn near 90%. 90% accuracy. It's we called the top on Friday. We called the top on non-farm at 925 before the price action was even on the chart. We called this top. We didn't call this top at all though. But we caught this top on stream. And I don't remember actually. Let me look at the levels for Friday, Thursday. Yeah, so it was 925 was the high, 575. So okay, so 575 and 555. So we caught the top and we caught the bottom. 575. Okay. So I was looking at 575 for an entry, but they front ran and the low was at 585. So this entry right here would have been wrong. I mean, you got a bounce here, but it wasn't this bounce, but you got a bounce. And it's just stuff like that. It's where I was looking for this area because of where is it at? Right here. You can see that this was a previous high. I figured that the market was going to come back down here and potentially bounce, but apparently it wanted this value area low right here, and it didn't want this high. And this is what I do every afternoon. So I think that's when I'm gonna start. Well, I'm not thinking. I started doing it this weekend. Just tracking data, trying to make this as easy as possible. I asked Smith like his opinion, and his wife asked for her opinion as well about, things that people may want to know. And she actually brought up some good terms that I'm gonna try to actually try to implement as well. Because so she said that she wants to understand price action better. She has a good grasp on support and resistance, but she wants more help and a better understanding of when to use trend lines. I think that was like the biggest thing that she said. And which time duration should she use when she's making a trade? Um, I think the best time frame to trade intraday is the minute chart. It's from the minute chart is the best chart to trade on, in my opinion, to take your entries and trade, because you see the minute chart has so much information, so much data. It's basically like my tick chart. This would be considered a minute chart, uh, but I think the minute chart is like the best time frame to trade on, not to get support and resistance areas on. Higher time frames like the hourly chart. If you're intraday, the hourly chart really should be as high as you go, in my opinion. The hourly chart is all you need for direction, support and resistance if you're trading intraday. If you're a longer term trader, that daily chart, 4 hour chart is your friend. If you're trying to hold it for years, that weekly, monthly chart is the chart that you want to look at. But for us, if you're trading intraday, that the minute chart, the hourly chart, it's really all you need. But you can really tell the direction the market wants to go on with the hourly chart. This is all you need right here. All you need is gives you enough information to make your decisions. Because this is the daily chart. And if you're trading intraday, it's not going to really give you information to trade intraday. It's really not. It's for longer term traders, swing traders, 4 hour chart. Same thing. You're not going to get anything intraday in this chart. This is if you're going to swing. Now you can use these charts for obviously super support, super resistance, obviously 4 hour resistance, 4 hour support, daily resistance, etc. But in my opinion, it just hasn't done nothing. Dude, it does nothing intraday. So yeah, my goal for right now is just really start taking this thing serious. I want to imagine that you guys are clients and that I'm trading your money, and I'm expected to bring a return weekly, monthly, quarterly, stuff like that. Kind of tell myself that this is a hedge fund and I have expectations to produce results. If I begin to see it that way, then it's going to really put me to the test. Creating reports to give to shareholders, stakeholders, using terminology like that, using terms that would suggest that I am running a corporate business, that will put me in that mind frame. And so, uh, yeah, I'm gonna start doing that. I'm gonna start doing that. And like I said, I got to March 1st to perfect it. And then we'll move forward from there. We'll move forward from there. Okay. Yeah. It says, do I contribute a long term with trading profits? Honestly, I don't mind doing that. I definitely don't mind doing that. And if I understand what you're saying is, will I give back to the audience? Like any gains, any stuff like that? Yeah, sure. Sure. I see, because like I said, when me and my trading partner, when we first started doing this, uh, shit. I mean, there's some good traders out there. I'm not saying that there's not, but I feel that this game is full with gurus, people that don't actually know how to trade. They just throw some contracts on, take a good scalp, make a lot of money, and they rinse and repeat. Not saying there's anything wrong with that. Not saying that. But I feel that they don't really explain what's going on, and they really don't know what the hell they're doing. Y'all guys seen in multiple instances that we catch 50, 100, 200, 500 point plays consistently. The reason why I can do that is because I understand what's going on. And me and my trading partner wanted to change the game. And in that sense, with these gurus, people that don't know what the hell they're really doing. But then I've come to the realization some people prefer to be scammed. I don't know why, but that's a reality. People prefer to be scammed. I don't know why. I think it's always a new expose video coming out, but people don't care. And the traders that actually know how to trade, those are the traders that are not getting any form of exposure. Now, it could be a lot of things. Obviously, if these guys are good at marketing, they have a lot of partners. Obviously, their content will get pushed out more than everybody else's. I can understand that. They have a lot of money to throw behind advertising. They have a lot of money to throw behind promotion and stuff like that. So those are the people that people are going to see first. Okay, I get that. But I mean, once somebody shows me that they don't know what they're doing, I mean, regardless if I see you everywhere, obviously I don't need to be there. But I guess that's just how I think. But I will assure you that uh, I have no interest in scamming anybody. I have no interest in that. That does nothing for me. This is not a quick cash grab here at this channel with me and my trading partner. I find no value in doing that. I find no value in that. Even if that's what people want, I don't find any value in that. Because not only am I cheating you, I'm cheating myself. If I sit here and pretend like I know what I'm doing and try to sell a course or something like that and just make money off the course, or what would I learn? I don't learn anything. I'm still dependent. I'm dependent on your ignorance to buy my course that and is this the same course that's getting circulated around with everybody: support, resistance, trend line, triangles, rectangles, this, that indicator, or this indicator, nothing of substance. Generic course costs $2,000 or $5,000 because apparently if you give things away for free, people don't value it, unfortunately. And I'm seeing that with my NA meetings because it's like it's so accurate. Like, it's free. Why don't you want to watch it? But unfortunately, because it's free, that's why. And I kind of hate that about us humans, because if it's free, then people automatically think that it's no good. So, mm, mm, yeah. So, yeah, there's a lot of things that I'm thinking about, a lot of things that I want to implement, and there's a lot of things that I'm just gonna have to get over, because me and my trading partner, we will be, and we are going to be at the top of this game for sure. And those that been with us, stick with us, support us, we'll definitely give back for sure. Because it's not about the money, it's about the process. It's about them targets. It's about to say that I saw this in the market. This is where I get in, and this is where I get out at. And if it doesn't hit my target, that means my analysis was wrong. Is just that simple. So yeah, we'll definitely, yeah. And then with Smith, I mean, he goes and he does his job off and on, which for whatever reason, the past couple of times that he had to he gets called back on. It just, if it's not one thing with his internet, is another. Like I don't understand why. Like the first time when he went, they had him in a decent spot, but then the follow up times, it was like, yeah, dude, we're not going to provide basic internet, which is basically torture. Like, how do you not provide a human being without internet or a reliable internet connection? I mean, I'm pretty sure. I mean, shit, we have like, dude, Elon Musk has these satellites, these radios towers that provides an internet service in rural areas. Why the hell does the military don't got that when Elon Musk's business is actually funded by the government? So it's like there should be no reason why a place should not have no internet connection, but apparently we still live in a time where anyway. So I'm fortunate enough to have a career where I have this flexibility and freedom to where I can do this and at the same time do what I'm supposed to do, what I'm been hired to do and tasked to do. But obviously with Smith, he's not as fortunate, unfortunately. So he gets called away. And we want to change that with Smith. If he can turn this into a business, come back, trade, be able to generate his own income with this, then he can supplement this income, and he doesn't have to be on somebody else's time. He can be on his own time. Okay. Okay. Yeah, I appreciate that, MB. Yeah. Mm. Yeah, we do have that, but I mean, yeah. Yeah, I'm gonna make it a point just to do that. I got into like the end of the day, the end of this month. Make it a point. ES at this point, ES is just so easy to trade. I just hate how slow it is. I really do. I really hate how slow it is, but mm, So it looks like the bears right here are selling a retest right here. Mm. So I would not be surprised if we actually do continue to move up. I would not be surprised. I mean, because technically, I mean, we've had that break of structure. So they broke, they came right back, they sold it, they dropped, they bounced, they sold the retest here and they dropped again, they dropped, and then they dropped again. So probably 680, 680. We're gonna keep an eye on 680 because we could see this thing keep going up, but at the same time, I do think that we're going to eventually get a pullback here. I mean, even though price did hit an area of support, I do think that we'll probably get a pullback. And I wouldn't be surprised. I would not be surprised. Actually, yeah, that is actually a good question. So I asked Smith, as a trader, what information would you guys find helpful to help you navigate the markets? Like, what part of trading do you feel that you're missing? I think that's a good question to ask. What part of trading do you feel that you're missing? And if I get an answer, I'll make sure that I'll have an answer the next time we get on. It'll be something else that I work on because I mean honestly, I feel that trading is easy. I feel that what makes trading hard is you overthinking, over emotional, second guessing. The psychology, the mental and emotional game of trading is hard. Well, let me take that out. Let me say rephrase that. It's challenging. It's challenging to overcome, but once you overcome it, then once you overcome the emotional aspect, it's the mental, it's the overthinking. It's like for whatever reason, and I kind of hate this about the human experience is that once you step outside your comfort zone, it's uncomfortable. And just let that sink in. Once you step outside your comfort zone, it's uncomfortable. If you're addicted to losing, winning is uncomfortable. And if you're aware, if you're self-aware, you will see yourself, you'll see the algorithm that your system uses to slowly put you back in your comfort zone. My biggest one, and I'll share this with you guys, is I've never, before I started moving myself out of my comfort zone slowly but surely, I was uninterested in the distraction that is social media. I still don't have any accounts. I don't post on social media. My life is not the internet. My career is, but my life is not. What I find myself trying to do is scroll on YouTube and just scroll through shorts mindlessly. and I had to stop myself from doing that. And it got into the point to where I would time lock myself out of YouTube because I was so used to overcoming adversity. Now that I'm to a point to where I'm comfortable trading in any condition, uh, I still have to overcome those trend days, but I think I'm getting better at those. Those are only days where, I'll probably take a loss and potentially blow an account when the market is just going in one direction. But as I kind of look at those type of days and why those days happen, I feel that now I can probably have more winning days on those days versus losing on those days. But because I feel more comfortable, I see myself trying to go back to destructive behaviors like that, being distracted, not being focused, making small little mistakes, being impatient, just to put me back into my comfort zone, second guessing myself when I don't normally do that. I get a couple of payouts and then all of a sudden, oh, now I'm bored. I don't want to do it anymore. I start gambling. And those are behaviors that I did not exhibit before. It's because I want to overcome adversity. That's been my life. And I'm addicted to it. I'm addicted to overcoming adversity. And I'm just watching myself, putting myself in digging a hole, jumping into that hole just to see if I can climb out. And that's what I continuously do. And what's up, Toxic FX? I'm gonna answer your question, MB, but Toxic FX, hey, so that information that you shared on Thursday night about the Fibonacci retracements on the daily chart, I mean, I wasn't surprised, but the market moved all the way up to the 618 and it rejected. And I saw that after I closed down for the day. And so I was like, huh, I definitely have to utilize that. Where is it at? I think I used, let me take this to the daily chart. It literally went to the 618 and retraced. Actually, which candle did I use? Yeah, I think it was this candle. It was this candle right here. And look at that. That thing went straight to the 618 and rejected. And look where it bounced. Look where it bounced. Interesting. Interesting. So the 200% is at the 22,203. So I think that's where the market's going. Probably further. Probably further. But yeah. Yeah, I see that. I see that. I used the last candle and yeah, rejection at the 168. It came right back to the 79, 76. The crazy thing is, and this is why I say that ICT, what he teaches is absolutely correct. Him as a trader, no, I don't think that he's one of those people where his teaching is correct, but his execution sucks. Because this is a level where I watched one of his the ones that I forgot which one. It doesn't matter. But he gave this little level right here as a pullback level, the 79 to 76%. And this has been I have this on my fib retracements for a while. And it's no surprise. It came right back to this area perfectly and bounced. I've come to the understanding that this market is algorithmic. I mean, at this point, you should too. It's going to use Fibonacci levels. It's going to use retracements. These levels that the market uses, it's all algorithmic. It's going to reject at these levels. It's going to bounce at these levels. It's going to extend at these levels. So just keep that in mind. But MB, kind of going back with the entries and the exits. Now, usually what I use for my entries and my exits, I have these ranges that I have drawn out, these pivot points, these ranges. Where I get these ranges is I look for areas where the market revisits multiple times, kind of like right here. You can see that the market comes in this area multiple times. And to me, this is all I see is liquidity. So if I see the market go through an area like this, pop right back up. Actually, no. Let me just keep it simple. Let me just keep it simple. I feel like a good, easy A plus setup for people, a good, easy one is if you're new and you just need one A plus setup and build from there, is first, it requires patience. Obviously, it requires patience. You can wait for a double bottom, a double top, have an 18 to 27 point stop, and a retest of that double bottom or that said double top. That's one setup. The one setup that I like, and I feel that anybody can do, is if you see a breaker structure, you see where the market breaks down. A good follow-up trade is selling or buying the retest. The break and retest is a classic, easy mode, beginner-friendly setup. Just buy or sell the retest, and you should get a decent move down. You see a big engulfing candle, and you see price retrace. That's in this right here. You see where this is a swing low, it pops up, it breaks, and it comes back. You sell that retest. You have your stop 18, 27 points, and you target lows. The break and retest is a great beginner friendly setup. Unfortunately, what makes it a challenging setup is that it requires patience and it requires not succumbing to FOMO. If you just tell yourself that the market will always come back, you will be profitable. Like right here. I think this is a good example of the market coming back. Even though you missed this move right here, it came right back. And not only did it come back, look at this massive move it made right after that. An easy move. Easy. Let me see if I can find another one. I mean, right here, you see this little block of liquidity right here. It breaks out. I mean, if you chase this thing going higher, I mean, if you chase it the first time, you got stopped out. You chase it again, you got stopped out just for price to come right back. And this is where the bulls, they bought the retest here. Let me just draw this out. You draw that out. You got your area where price is consolidating. You see that breakout. I mean, you could have bought this first pullback, but I mean, not a lot of people was going to do that. But this is where people are going to really buy it. Right back in that area. And you can see if you bought this, this thing went straight up. Straight up. Waiting for that break and retest is definitely a almost guaranteed trade. Almost. There are times where it won't work. But for the most part, it will. If the market is trending in one direction, Usually if it's moving like this and then it comes back, usually it fails. But it works perfectly in range bound markets. And once the market is kind of like right here, this is a good example of if you were to buy the retest of this, obviously you would have got stopped out. But if you sold the retest of this one right here, obviously that worked out. Sometimes it doesn't work in trending markets, so you got to kind of be mindful about which side of the trend the market's going. I can understand why people bought this because this does look like the market did bottom out. It did look like we did break out, and people buying the retest right here, but it just didn't work out that time. And you kind of have to accept when it doesn't work out, and you have to be mindful about where you place your stops and adhering to that stop and not letting it go over it. So yeah, I did. Yeah, I did. I did. Because we are in relations. Yeah, no problem. Okay. Yeah. Yeah, and I do agree with you, Toxic FX. I said this early in the stream that because we didn't break this little area right here, it's highly likely that we're going higher. Actually, let me show you this, and then let me show you this right now. This is another tool that I like to use, just for those that are just joining. It's called the CFTC data. If you're not using this, you're really cheating yourself. All right, so the CFTC data, and I'm gonna show you where you can collect this data yourself. This is another tool that I like to use when navigating this market. This week, the market suggests that we are still going to go up. We're 58% long and only 42% short. Right now, there's about 19, 20,000 contracts net long. So we could see a move down. I'm not saying that we won't, but overall, the institutions are still bullish. They're 58% bullish. Last week, they were 62% bullish and only 38% bearish. And so we got that move up, but then we got that crash down. And you can see that there were about 30, 31, 32,000 long. I mean, from last year, you can see that there was only a few times where the market was net short. But for the most part, and you can kind of see it in the beginning of the year, that these institutions were like super long. The darker the green color is, that's how aggressive they were. And in the beginning of the year, we all know how bullish and aggressive the bulls were of beginning of last year in January. So we're getting more bearish days, but the market is still overall bullish and net long. The commercials are net short. The commercials is hedging. The commercials are always hedging against their contracts because they actually get theirs delivered to them. So they always have theirs hedged. If it's more short, then you should say that, okay, since they're still net short, then that means that the market is still going long. So this is where you can get this data yourself. It's called the CFTC, the Commitment of Traders report. Let me try to pull that up. All right, I apologize about that. For whatever reason, this thing muted my mic. All right, so I guess the powers that be don't want me to show you guys this, but anyway, um, that's not what I wanted to show you. Let me take this back. All right. So yeah, this is the commitment of trader. All I do is search for the Nasdaq. I capture the minis, even though I trade. So I don't know why, but it's like the micro Nasdaq is more accurate than the E-mini in terms of trading. Like the structure is more accurate on the micros. It has more volume. So I trade on the E-mini, but I'm looking at a micro chart for the structure. But I capture the E-mini data on the CFTC side. And all I do is collect this data right here. So the institutions are 75,000 long contracts, only 56,000 short contracts. The commercials are 140,000, 170,000. I just collect that data on a spreadsheet, and it's just that simple. So it just lets me know what they're doing, because obviously the institutions are the people that are moving this market. So you need to be following what they're doing, regardless of what your bias is. Their bias will always trump yours. Yeah. So that's how you get the CFTC data. Everything else is that I'm just collecting from the market itself. Like I'm just looking at where I'm seeing price reject, where price is bouncing, where it's rejecting. I capture the moves that it makes on a daily basis with this spreadsheet right here. Kind of going back to it. I just started working on this this weekend. I'm just capturing. So this just puts things into perspective for me. So like I said, I started capturing this data from January 13th because I'm not going to be sitting here and try to capture the data from last year. But on a normal basis, look at how much the Nasdaq is moving. It's like on January 13th, it made a 344-point move to the downside, and then it flipped and made a 298-point move to the upside. And then it opened up, it made an additional 146-point move to the upside, and then it retraced 370 points to the downside, and then bounced 216 points. So just capturing the numbers of how much the Nasdaq is moving back and forth, this right here should be like, wow, you really should be on your P's and Q's with the Nasdaq. All you really need is 2 or 3 micro contracts, and you can be profitable. The Nasdaq is obviously moving enough. I think 100 points on one mini contract, on one micro contract is $2 on 100 points, and it's well over 100 points. I mean, just this day it just made a move down 68 points, but you made a 543-point move to the upside. And then you saw an 82-point rejection at the end of the session. So the Nasdaq is moving. You really don't need to be blowing your account on the Nasdaq if you're not comfortable trading it. You can trade 1, 2, 3 contracts and be profitable. I've already showcased that you can make a lot of money with 3 micro contracts. But I've already shared that I just hate trading that way. But it can be done. I've done it. We've made a lot of money with my micro contract strategy that I use and utilize. And then on top of it being a good strategy, it has a fail safe in it. If you're getting in at support and resistance and price is stopping you out, a follow-up trade will not only bring me back to break even, but I'm profitable. But the only downside to that is that I got to catch really big moves. I got to be in at the bottom and I had to get out close to the top. And trading that way has also helped me stay in positions longer. Like I'm not. Did I move this thing or something? Anyway. So yeah, so trading with smaller size on the Nasdaq, uh, you can still make your money. I mean, if you were to get in at the open 440, I mean, it's about a 200 something point move right here. 440. So that's 200 points right there. 242, 52 points. Okay. And this is what I mean by this is a micro Nasdaq, and this is why I look at a micro chart, because this chart versus this one, you can see, well, for me, the price action is better on this chart. All right, so I'll probably just run this thing for 15 more minutes because I've also noticed that the market don't really do nothing in pre-market anymore either. I mean, if you miss this move, I mean, we could probably see a move up to 7. I mean, if they hold this range right here, then we can probably see a move up here to 765, possibly R4 at 803, 805. We could possibly see that move. No, they broke it. They broke that. Yeah, probably. Yeah. Yeah, why not? We'll see. We'll see what happens. Oh, wow. I'm in a position right now. Yeah. So Bitcoin. Yeah, probably. This one. Just when I took this off of that, but it's not mm. Yeah, I got the lifetime license with the Ninja Trader 8. Yeah. And you said if Bitcoin takes out 100, takes out previous high, we should test 105. Yeah. Okay. Yeah, I agree with that. Yeah, I agree with that. And that shit knowing Bitcoin, or if you're talking about Bitcoin futures, you'll probably see price come up to 46.20. Let me see it go. All right, so let's look at that Bitcoin. Bitcoin USD. I don't feel like that's the right one. I would never, ever, ever. Y'all guys will never see me suggest a long on Bitcoin. Always shorts. It's easier to catch shorts on Bitcoin. Bitcoin futures. I don't trade Bitcoin. That's too expensive for me. 100K coin is it's too rich for me right now. And shit, even if I could afford it, that's too much. Easier ways to make money. And man, shit, people were, you know, well, I'm not going to talk about that, but buying this top and then having this thing drop, that's not going to be fun. That's not going to be a fun hold. I know a lot of, I mean, shit, with a strategy with Bitcoin, you got to have to buy and hold this thing and hope that it comes back and hope that it doesn't dip down too far. Hope this thing does not dip down too far. What's up, Arfarel? So you're saying Tick Tick Traders, you said it took them 5 days for the approval and another 2 for the payment? Okay. All right, so Tick Tick Trader, huh? I mean, shit, as long as these prop firms are paying out. But yeah, but congratulations on your payout, though. Congratulations, because that does definitely take some. Okay, so All right, so let me just let me really look at this because I guess this thing could just run. I guess it could run. The bears failed to break past this range, so this thing could just run. Let's see. Let's see where this thing could go. And that's if the Bulls can hold this. I mean, that would be absolutely crazy. I'm pretty sure that we do see that. All right, so let's look at this, and then we'll come back tomorrow. We'll definitely come back tomorrow. So we got the trend line break from here. So all last week the market was trending the entire time, all week. The market was trending. We can see that we got this bounce right here, that bounce, that bounce, that bounce. And once the bears were able to break that trend line, they pulled back and they was able to sell it right there. So we got them to sell from that trend line, but they found support at this range. And this is where we got that bounce right there. The CFTC data is suggesting that we continue to go up higher. The institutions are 58% long. So I would not think that this market is going to go short anytime soon, especially with them holding this range. We got a rejection, and then not on top of them holding the range, we successfully made a higher low successfully, which would technically say that we're still in a uptrend, technically. If we break past this range right here, because you can already see that we've already double topped at 960, 967. We've already double topped. So that tells us that the market is going to go higher once we get above that range. Once we get above it, once we get above 960, we could see 2205. That's been a level for a very long time, 2208, about like 2205, 2206. That 2205 level has been, because I remember it from last year. I'm not going to go all the way back because I'm not doing that. But yeah, that 2205, I do expect to see a reaction somewhere around that area. So I'm going to keep my eyes on it. But we can definitely see a move up higher. The next area of resistance is going to be 22,001, 22,111. That's that high. That's the next high. We almost got there though, but then it rejected at the 9. So we'll see what happens. We could see a rejection, but I don't think we see a reversal. I want to be very clear. I would flip bearish if we break this range and we close underneath this low. I'll flip bearish then. But until we get that, the structure is bullish. We got until like 200, about 240, 200, 240, right there where we got that breaker structure right there. Let me make sure y'all guys can see that. You got that breaker structure around 240, 244. It was a low of day and it was a value area low. And that's where we got that breaker structure down. We got that big move from 244. So maybe 200, 244, somewhere in this little range right here. Let me actually just project this out into the future. I'll project that out into the future. All right, so we're gonna keep an eye on that little range right there. It overlaps with this one. So we'll see what happens. We'll see what happens when price gets up into this range. But I do expect for the market to react here. Either we're going to see a stop run, and we can possibly test all-time highs at 22,450, which I doubt. We could, but I doubt it. Or we'll come back up into this area right here, and depending on how the market feels, that's going to be the deciding factor. If we get a rejection, if we get one more rejection from this area, we're going down. I mean, it's only so many times the bulls can buy and the market is not progressing higher. Obviously, that tells me that the bears are holding this area. Every time the bulls are buying into this, trading the market higher, they're knocking it down. I mean, but as they knock it down, the bulls buy it up. So, I mean, if the bears can hold and we break key, I mean, if we break this range, I mean, there's really nothing holding it. There's no support underneath 406. There's no support. I wouldn't call that support. There's no support. And we can probably get a retest. And then I'm pretty sure they run 760. They run 760 for sure. And then we probably might get price coming back into this range right here. It hasn't been touched yet. They haven't touched 390, 2390. They have not touched that yet. So the market is waiting to pull back into this area. There's definitely going to be buyers here. I would highly doubt the market just runs through here, because there was enough buyers here to make this move up and create all-time highs, and they have not tested this area yet. There might be a fake out underneath this range, but I highly doubt it. The NQ is crazy, but she is not that crazy. And then the ES ain't crazy like that either. So if the ES ain't going to do it, the Nasdaq ain't going to do it. Mm. Yeah, kind of like the same for the Nasdaq. 918. I was looking at 918, possibly 905. The market almost got there, but the bulls bought it right back up. But the structure is still bearish. Technically, we're still trending on the ES. We still got these higher lows. So all right. All right, so MB, I use with the Nasdaq, I use an 1800 tick chart. 1800. A 2000 tick chart is just the same. I just like 1800. I just like the 1800 tick chart. And that's what you're seeing whenever you look at my chart. When I'm trading the Nasdaq, like I said, I have a 900 tick chart. It's half of the 18 because of the let me show y'all this, and then we'll end the stream. You can see that on the micro Nasdaq, it has way more volume than the E-mini Nasdaq. So I'm trading a 900 tick chart on the E-mini Nasdaq and an 1800 tick chart on the micro Nasdaq. And I usually don't trade on any other chart. That's where I do all my trading, all my entries, all my levels. This tick chart right here is an 18,000 tick chart. So I make all of my this is my higher time frame, quote unquote. And this is where I find all my levels, areas where I should be looking out for. These little scion, these are just high and low of days. I use these levels because they're very accurate. You can see it for yourself that these high of days, low of days, you can see price reacting at these levels. So I prefer to use tick charts than time-based charts, is because tick charts, it's based on volume and transactions. Time is based on time. I'm not saying that one is better than the other, but I feel that the tick chart tells you a better story than the time chart. It just tells you a better story. But you'll see more traders trade on a minute chart, on a time-based chart. So the only time-based chart that I use is going to be the hourly chart. I don't use any other chart outside of this chart. The hourly chart tells me a direction of where the market's going. And this is why I only have a couple of days loaded up on this chart, because I don't need a whole month of data. I just need really the week. I just want to see where the market is going, what it's doing, and I can kind of filter my bias through this chart, my directional bias through this chart. So that's how I trade. Yeah. I just added trend lines to my my game. I kind of wish that I was utilizing trend lines way earlier. To tell you the truth, trend lines were, I believe that so for, I guess when I started trading, someone said something about, oh no, it broke a trend line, blah 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 blah. It was, bashing trend lines, and I think that's a good example of checking your belief system and making sure that your belief system is up to date. The reason why I never use trend lines is because of whatever, I forgot what comment, and that's the crazy thing. I don't even remember why I don't believe in it. It was a comment that I don't remember the comment where I saw the comment. It's just that this comment stuck with me, and I just never trusted in trend lines. Never trusted in them. And then I saw that a lot of people were finding success just trading trend lines. And I will admit, how easy is it to correctly draw a trend line and just trading off the trend line? And that's why y'all guys see me use more trend lines, and I had to update my belief system because of that. And that's kind of also something that I do on the weekend, is making sure that my belief system is up to date. I think it was probably an older trader that, the old school trader that, they didn't have the fancy smancy indicators and stuff like that. They had to print out charts and all kind of other stuff to make their decisions. I'm talking about dinosaur traders, and they had to use the tools that were available to them at the time where they have to actually call their broker to make trades versus making it on a digital platform like we do, the luxury we have. And I think one of them probably said it, because knowing my personality, I'm not going to just listen to anybody unless you have a proven track record. And I think they probably said it. But trend lines work. Chart geometry works. It works. But okay. Obviously, this is all we're getting tonight. It's been like that for a while. I mean, it seems like the market has been moving it exactly as it opens. And if you're not in at the moment of open and in a good position, then unfortunately, we're not going to get a good trade. Unfortunately. Mm. Yeah. Yeah. Yeah, MB. Yep. Trend lines for breakouts. Yep. I'm going to show you something. Uh, you see that right there? It's a simple trend line. Simple trend line told you the story. Told you the story. Now, obviously, this is a bigger trend line. Let me see if I can try to find a better example. But just drawing that trend line, you can see that the bears or the bulls failed above it, and they got knocked right back down. And they came and tried to test the trend line again. They got knocked right back down. They finally was able to break out of it. They tested it. They came back up. They failed, got knocked right back into it. But you don't want to really be trading in the middle of a trend line. You kind of want to get in as low as possible. And usually a good area when you see as low as possible is if you see a double bottom or a double top, depending on what side of the trend line you're on. You got this trend line right here. You see that the bears are holding it. And look at this. And it's crazy. If you keep extend this trend line, you can see that like where the bulls almost bought it at. Trend lines work. Chart geometry works. You draw a good trend line, you adhere to that trend line, it works. I have yet to see the market do something like this where it breaks out of a trend line and then craps down. I have yet to see that crap. I have yet to see it. When you see a good trend breakout, it's like, dude, it's probably going back up into an area of previous resistance. So a good target or a good entry would have been right here at the retest of this trend line and targeting old areas of resistance. Shit. I mean, from here to here would have been a good, decent trade. This is an awesome trade. But let me try to find a better example. Let me look at this one. Let's try. Maybe I should keep them on. Yeah, this is a good trend right here. This right here is a good one. That's a good trend right there. You just line them up to the top. They trend. You get that breakout. The beautiful thing is that you don't even have to get long at the breakout. You can get long at the retest, and it squeezes all the stops. This right here is a good trade. It's just a simple trend line break, and you trade in that direction. You get your stop underneath that trend line. Honestly, that's a simpler trade. And here's another example right here. You find that trend, you come to that breakout, and you don't have to chase it. You can wait for it to come back, and it squeezes people out. Trend lines on the Nasdaq, especially the ES, You want to respect your trend lines on the ES. Don't ever, ever, ever trade against a trend line on the ES. If you're in a long position and the trend line is in the way, it's better to actually wait until the bulls break above the trend line and pull back. Because on the ES, you really shouldn't be feeling FOMO on ES. The ES is very technical. It will break out and it will pull back. There is you can't even find nothing. You can't show me anywhere on an ES chart where this thing just runs without pulling back. This shit does not do that. It does not run without pulling back. It does not run without pulling back. The ES is so technical. You really should not be chasing the ES. If you chase the ES, you will become a liquidity donation to the market. It is just that simple with the ES. But with the Nasdaq, unfortunately, she gives you the rope to hang yourself. You can chase the Nasdaq. Now, you'll be successful with chasing the Nasdaq sometimes, but in the long run, you'll become a liquidity donation. The Nasdaq likes to play the long game. Apparently, if you chase her, she wants you to chase her. And if you stay in long enough chasing her, well, not only does she want to make you a liquidity donation, she wants you to sacrifice your account to her. She is a goddess. She requires sacrifice. Sometimes you have to sacrifice one account so another account can flourish. She requires that shit if you chase. So don't chase her. Let her come to you. And look at this trend line right here. It's so simple. Look at this trend line. They got the break and then they shorted it. And then they came back and they retested this area of liquidity right here. Perfect break and retest. And then sure enough, where they reject at? Right here at this trend line. The bulls failed above this trend line. They broke. They came back right there and then they shorted it. Trend lines is definitely a big part of my game now. I feel like trend lines has it's up my win percentage. I'll just say that. I'm not fooled by some of the foolery that the Nasdaq likes to do now because of how accurate these trend lines are on the Nasdaq. I'm not fooled by it anymore. There's some times where it's like, okay, there's no way it's going up higher. So sometimes I'll flip short because it's quote unquote too high to buy, but it's not too high to buy. As long as the market adheres to that trend, it is not too high to buy. It is not. And I don't get tricked by that no more because I'm using trend lines a part of my game. Shit, even though you would feel that the bears would come back in, they did not. Let's look at that. Let's look at that. And that's a perfect trend line right there. As long as it's bouncing and it's holding and it's holding, it is not too high to buy. But once you see that break of that trend line, but then it's highly likely that you should be getting out of it because now when the market breaks underneath the trend line, there's nothing but stops that's holding the market up. As the bulls buy here and has their stops are right here. Their stops are right here. And if the bears can tap into this, it's an easy stop run lower. There's no support. It's trending. There's no support. So that trend line break is that's another easy trade, another guaranteed trade. Just about. So but all right, guys. We'll definitely come back tomorrow. We show up every day. We'll see what the price action is like overnight. That's definitely going to help us with our bias going into tomorrow's stream. So I'm just going to sit on my hands tonight and just let the market set itself up. So we'll come back tomorrow. Mhm. Yeah, it definitely is. But all right, guys. Yeah. All right. Have a good night, everybody. Peace out.